Australia real estate market trends. New regulatory restrictions abroad diverting Chinese real estate buyers. Chinese buyers are investing in most of the booming property markets across the world. China itself is dealing with high urbanization demand, where about 205 million people will be moving to cities by 2020, and this will raise additional need for homes. In China, as per local customs, newly married couple need to start their life in a new house, and this raises the demand for new homes. Growth in investment at home was 10.4% YoY. In 2017, growth was 7%, land registration price were 20% higher, and the residential price increased in at least 15 major cities in China. On a monthly basis, at least 55 out of 70 cities reported growth in price and 60 sites depicted increase in house rate. Restriction on foreign investment in Australia, Thailand and New Zealand. Countries in the Middle East implemented new regulations to attract foreign investment in real estate, but there are other global regions where the local government is imposing restrictions on such transactions. In 2016 to 2017, Australian property market reported a decline in growth as the investment from foreign buyers reduced significantly, and there were other constraints such as weaker household income, tighter lending policies and affordability issues. The key regions where property transactions were reported included the New South Wales and Victoria. Residential property market constituted 88% of all the transactions in 2016 to 2017. The real estate transactions value reduced from $122.1 billion a year to $69 billion a year in the 2016 to 2017. The new regulatory restrictions on property transactions led to disqualification of foreign applications, mostly Chinese and American residential property application. The approvals were down from $247.9 billion to $192.9 billion in 2015-16. In Australia, the local government imposed extra charges and restrictions on property investments by a foreign national, which included non-refundable application fee and prohibition from buying residential property in re-established dwelling areas. State taxes, an annual vacancy fee and ghost tax have been imposed on such residential properties. In New Zealand, people who are not residents will not be able to buy property or residential land. In New Zealand, the foreign buyers will have to pay on capital gains from property sale in 5 years of buying, and buyers will have to obtain a tax identification number and set up an account in the local bank. The new regulations may ban foreign buyers from owning existing houses in New Zealand in 2018. Even in Thailand there are various regulations which restrict overseas property buyers.